Hello. Let's not waste a single time and get into our back testing session. Not a back session. We're gonna go over the week. Then we're gonna make some videos. Then we're good. Okay, we're good. We're good. We're good. All right, that's kind of crazy, but we good. Okay, stop. Let me stop. Stop it. Let me stab it. Let me stab it. Let me stab it. Yeah. Let me stab it. Let me stab it. All right, let's go over our week. Let's go over the week. I think I'm slow today. It's just that my emotions they don't want to talk too much. I don't know why, but we gotta get the work done. We gotta get the work done. This is my weekly market recap of how I lost 0.50%, which is $250 of a 50K account. We're gonna be going over our week. This week was very hectic. I did not look at the monthly time frame of a open high low close concept of the monthly. So this week was very difficult for me to trade. Although we did have a setup, that's why I faced a loss. I made a mistake, but we did have a setup for a 5RR, which I missed. But we're still gonna journal it, right? But the main reason why this week was so difficult was because of the monthly, right? Monthly open, high, low, close concept. Because monthly time frame, the first week is usually a accumulation. Second week is a middle placement of the first week. He swoops out the high or low of the first week. The third week of the monthly time frame is a expansion. So he expands to the high, to the low, to the high of the accumulation or the low of the accumulation after manipulating the low or the high. And the fourth week is a retracement / total soup. So market total soup the previous week, the third week high, it just comes down and just retraces and just resets, right? So basically, market makes accumulation, manipulation, expansion, reset. So the reset part is going to have to be a retracement. And that's why we faced a loss. So the retracement will have to soup out, usually sometimes soups out the previous week's candle high or low, then just resets inside the range. And that's what we had perfectly in this session. This is what happened perfectly here. And let's get into it, right? That's why this week our bias was very confusing. That's why I was getting tricked, right? So if we go to the monthly time frame as our bias, first of all, right, we go monthly CRT to the upside. On the weekly, what do we had here? On the weekly, we had a first week of the month, which was accumulation. Second week, a manipulation. Third week, expansion. Fourth week, souping out the third week high or low, depending on the bias, right? And everything I'm saying could be vice versa. Then eventually souping out the high, then closing down, right? So basically closing off fairly, right, on the monthly time frame. And as well, this is a reset candle where the market likes to, retrace. So yeah, because market needs to close in a fair price, right? So there's a monthly open high low close concept, right? So that's why my weekly, I was looking for longs here to this week. I was looking for longs to shorting up. That's why my boss was wrong. And my weekly market forecast, as I told you guys, if this CRT gets respected, we're gonna use the CRT. Because what I was looking at, I was looking for an ERO to Iris Alaga inverse for the last week. So I was looking for a long here, right? To go to the CRT high, to the high that creates IRO. So I was looking for longs. That's why I faced a lot of trouble with my Atlantis. Yes, I didn't lose them. I should have not even lost this week. I made a mistake. We're gonna talk about it. But I should have actually made money instead of losing money, right? So that's why high time frame bots was very difficult to read. On the weekly, on a daily, on Monday, there was no setups. I was looking for longs here. And on Monday is where I had my loss, right? On Monday, the reason we had a loss here, I'm pretty sure it was Monday, right? I was out looking for a New York expansion. Yep, we had an SMT that occurred. So Monday, I was looking for a long. I was looking to long out of the fair value gap. I was looking to do a New York continuation out of the hourly candle. Hourly candle got disrespected. So I did not use the hourly candles, and I went switched to the 4 hour. The 4 hour gave me SMT during this current, during this specific, during this specific price point, there was an SMT, right, with GU, and the SMT was false, right? You can see 10:30 a.m. came, we had SMT, Motor 1 CI as the entry, that eventually stopped us out. Why did this not work out? I made a mistake where my SMT divergence, the most important factor of a SMT, occurred outside of kill zone. The kill zone is from 9 a.m. to 10:30 a.m. for a specific time of a purge, and the market does that. That means during a specific time, market likes to take a purge. And what does SMT do? SMT prevents a purge happening. So time ran out, and that's why I lost. So the lesson on this trade that I took for a long right over here to the upside, the reason we lost, once again, what was the reason we lost? Because the SMT happened outside that kill zone. And that's why we lost, right? Because, the most important factor of SMT divergence is a specific time. So it must happen at a specific time where market likes to take liquidity. And, if this SMT divergence happened around here, like, right before hitting 10:30 a.m. candle, this is a 10:30 a.m. candle, right before hitting 10:30 a.m. candle, there's an SMT here. If there was SMT and I get a Model 1 CIZ confirmation out of it, I would have entered it, right? And if that would have gone a loss, it would have been a perfect loss. But for the SMT divergence, the high or low should not be souped, depending on my bias, right? And only if the SMT divergence happens before hitting the 10:30 a.m., right? Which is the Pacific time of your purge. So that's why we lost there. So that was only loss in the whole week. Tuesday there was no trading day. It was the day before FOMC press conference. As you guys know, we don't trade the day before FOMC press conference. The only day we can trade before is NFP. We could trade before NFP, we could trade before CPI, we could trade before PPI, but not FOMC press conference because market will tend to move even faster, right? You can see I'm not trading that day, right? It's really ass. So I didn't even do anything there. On Wednesday, during our FOMC press conference, our setup first was bearish, right? I was looking at how the context here, right? Market soup out the range high, right over here, soup the range high, soup out the range low, right? Soup out the range high. We had a daily range, right? We're in an already premium, so we're going to the daily range low, which got hit on on Thursday, I'm pretty sure. Yep. Oh no, on Friday is when it got hit. So I was looking to shorting all the way down here. And I was looking, to go down here as well. But I forgot, during that Pacific time, my bias was correct, right? But it got invalidated through market creating this CRT. So market tapped the 50% mark of the daily rejection block. Then market gave us a confirmation out of this daily CRT to the upside. So I had a confirmation on this trade, and our entry, the confirmation happened at 10 a.m. and after 10 a.m. I didn't get no setup, so I'll just call it a day off, right? You can see go to 5-15 minute time frame. Our hourly candle got disrespected, so I wasn't looking for no candle. I wasn't looking for any entry. You can see 10:30 candle got hit. Yes, he pressed out liquidity, but no entries here. So okay, I'm gonna call this day off, right? Although even if the market gave me a setup all from here, it would have not been a 2RR, right? It would have been a 1RR. It only takes trades that are 2RR. But my buys got invalidated right at 11 a.m. So I would have not looked for shorts at all right after hitting 11 a.m. because we had a CISD confirmation to the upside to this daily CRT. So the next day our bias would have been bullish, right? Although we do have narrative to the downside, we have to narrative to the upside. As you guys know, we prioritize CRT. In this case, we have a daily CRT to the upside. Daily CRT low got souped. Then the next day, we're looking for a New York reversal to the upside, hitting our take profit. And this is the trade I missed, right? So let's go. On this day, my bias was incorrect as well. I was looking for shorts instead of longs. I mean, overall, our bias was correct here, right? We're going basically out of the weekly CRT. But I should have focused more on the weekly CRT, right? I should have known, like, okay, this should definitely be going down because it's the 4th week of the month where market likes to reset, market likes to retrace. And you can see on this day, on Thursday, our bias was bullish. How come the bias bullish from the previous day when the market showed the CRT low? We had a 3-candle CRT. Our goal was only to the CRT, 50% of the CRT of the daily candle. Why? Because specific time. We took this trade at Thursday. Our take profit would have been here, not the high, because tomorrow's gonna be a fair close price. So market needs to close tomorrow. So that's why it would have made sense for the market to, not go all over here, right on Thursday, right? It wouldn't make sense. So market Friday needs to cool off, right? So for the next week. So my take profit wasn't too far away. So we just right over here, TP1, TP2. I was looking for a New York reversal, profile 1 a.m. accumulation, 5 a.m. manipulation, and 9 a.m. expansion. In this case, the 1 a.m. it was accumulation, 5 a.m. was a manipulation and the expansion, right? And our key level is supporting this daily CRT with this rejection block, and that's the only reason. That's the only narrative we had to the upside, right? We had more narrative to this. We had a daily CRT, right? We had a forward dealing range here. We're in the discount area, so it's good to go for the premium, which is right over here, right? Went to the premium, and eventually from the premium we plummeted right back to the downside, right? And we have more narrative to that, so that's we all hit downwards narrative. We as well, we souped at the range low here, right? We had a market made a low, then it made a high, then eventually once it made this low and high, market souped the range low. Eventually we had a range low got souped as well. Then eventually we want to buy the range is low. When we want to sell the range high, we don't want to do anything in between the range dynamics. So we had that concept as well to the upside. It was enough for me to take this trade, but I missed it. Why? And the reason I missed it is I woke up at 5 a.m. look at my phone. I did not know my higher type of buys. I thought I was looking for a new continuation. The market fooled me wrong. So I will tell you guys about the lessons, and at the end of the of the video about the weekly market recap. What are the lessons? What are the improvements? What can we take on from this week on to the next week and never make it again, never make the same mistake again, and go on forward, right? Going on forward, right? On Friday, our bias was bearish. I was looking for shorts here. We had the same bias here. Our drawn week got met, which I've emphasized from throughout the whole week. My drawn is going to be here, right? Here and here, right? So there's a daily range low. Daily range low is usually a drawn liquidity, same to the daily range high, right? After tapping the premium. So market was already in the premium. So drawn becomes the equilibrium, then the daily range low. So that's why drawn liquidity was here. Eventually got met on 1 a.m. candle. So I was looking for a near continuation here, right? For the near continuation, it didn't offer with a setup. It first souped out the CRT low, then went up, but our narrative was bearish, right? What was the narrative? Bearish. Weekly, it was Monday, we had a classic expansion profile too. And for this Thursday trade to the upside, we had a midweek reversal, right? So that's why I had more concept to the upside as well. And this to the downside was a classic expansion profile too. Monday half the week. Monday through Friday continuation, right? I mean, Tuesday through Friday continuation until the drawn liquidity. My drawn liquidity for the day was all the way down here. If we go to the 4-hour time frame here, what we had in a 4-hour time frame was we had this range dynamic low, range dynamic low, range dynamic high, range dynamic high got purged. We go to range dynamic low, right? Our daily range low already got purged. We had nothing there. We're in a daily premium, so we're going to the discounted area, which is all the way down here. So daily, we go from daily premium ERL to IRL. I had more context, right? you can see how this is I constantly have net context upside and downside. It all depends, right? In this case, what are we looking for longs here? Because we had daily CRT, we had a midweek reversal. Midweek reversal was eventually false, right? So we had a classic past-week profile too, and eventually ERL to IRL, right? We can see how context, for both, which is, okay. And eventually from here we had a daily IRL to ERL, right? So there was a lot of context. It all depends on what you feel, right? Not all what you feel. It all depends on what makes more sense to you, and go based out of that, right? In this case, we had a lot of context on upside, downside. Yes, it doesn't really make sense that much. Like, oh, you have a nature upside, downside, left and right, But this week was a very tricky week. If I would have just to focus on the weekly market, if I were just to focus on the weekly, monthly open high low close concept, where the fourth week is usually a retracement, right? Swooping the third week high or low, then retracing and closing, right? If I were to know that, it would have been very easy for me to trade this week. I would first of all look for sales here. Over here, I would look for sales, right? Over here, I would have not looked for sales until, because market, the CRT high got swooped on Monday, right? So I would have not looked for a selling opportunity, but it would have been very clear for what I was looking at. It would have been very clear to what I was looking at the higher time frame, right? So this long that goes against the weekly CRT to the downside, it still would have made sense, because we had a midweek reversal, we had daily injection block as our key level, we have a daily CRT, because as you guys know, there's a short-term drawn liquidity and there's a long-term drawn liquidity, right? And for a CRT, the 50% mark of the CRT is a draw on liquidity, right? And you can see right over here on this, I was saying, well, isn't this going from an ERL to IRL? Why the market went from an IRL to ERL? We had a CRT here, right? And 50% was the 50% of the CRT is a draw on liquidity as well in the higher time frame. Keep that in mind. And market went back to reach it. In this case, we would have not used ERL to IRL. As you guys know, we prioritize CRT more than ERL to IRL. But it would have made sense to go over here as well, right? We're going from a IRL to ERL, right? It would have made sense as well for us to do that, to go to the downside, right? So that short-term move to the upside would have made sense, and it would have perfect entry for a 5.7 RR, right? Which I missed. And now let's go over our improvements, our lessons on this week. What do we learn from this week? What can we take on to the next week and going on forward? What can we prevent mistakes? What can we do to prevent that mistake from happening ever again? Lesson number 1 is, when I should only trade SMT divergence from between 6 a.m. to 10:30 a.m. If an SMT divergence happened right before hitting 10:30 a.m., the CRT higher, CRT low that happened right before hitting at 10:30 a.m., the higher low should not be purged. If an SMT divergence happens after hitting 10:30 a.m. candle or at 10:30 a.m. mark, do not enter the trade, because it's not a key time. Because soda swoops happen from 6 a.m. to 10:30 a.m. or, if I give you guys micro, 9 a.m. to 10:30 a.m., right? There's a specific time where the market likes to hunt for liquidity and make big moves happen, right? And other than that, what's the next lesson? Go to higher time frame. Go to monthly. Look at the monthly open, high, low, close concept. First week accumulation, second week manipulation, purging out the first week accumulation, right? First week, high or low. The third week of the monthly open, high, close concept will give us a expansion to the high or low of the first week, where if the CRT low on the second, once this first week gets created, the accumulation phase gets created, the second week will manipulate the first week's low or high. Let's just say bullish, right? In this case, we'll super the CRT low, and the third week will drop to the CRT high, right? And the fourth week will just reset, basically cool off, right? And that we should focus on as well, because if that would have happened, we would have had a very clear move to the downside, because this made a lot of sense, right? We had a bearish order flow, we were just above a high, broke below the low, right? We had a lot of context, right? It would have made very clear sense for us to do that. And what was the last lesson? I've already talked about this lesson before, so I should definitely not make it again. I won't make it because we're human. We'll probably make mistakes, but we have to do it in a very disciplined way. I have to wake up at 5 a.m. I will wake up at 5 a.m. and I will not use my phone. I will straight not even look at the chart, go take a shower or wash my face, brush my teeth, come pray, then be on a chart. Not waking up, looking at a chart, oh, am I looking for a situation, half-assing it, and I get half-assed results. So that's why I missed this trade, right? Because I half-assed it and I got half-assed results, right? And that is the lesson. So what can we do next time? Wake up at 5 a.m. Not use our phone. Put our alarm a little bit far away from each other so we can wake up, go grab it, then go wash our face, right? And not use our phone right when we wake up. And I should be in the charts by 6 a.m. Regardless if I'm looking for a trade or not, regardless if I'm looking for a New York continuation or New York reversal, regardless if I'm trading or not, right? I should always wake up at 5 a.m. regardless. And that's the lesson. And the new lesson, which is the monthly open high locals concept, I'm going to implement it. I'm probably going to make a video on it as well, which should be insightful. It should be insight to you guys who are confused about why this week, did a bearish move to the downside. Why you're supposed to go for an IRL to ERL. As you guys know, we prioritize CRT more than IRL to ERL or any other concept, right? And that is the lesson. And this is how I lost 0.50% of my account, which was a $250 loss. It's fine. We learned from it. Now we put it down as a rule. I'll put it down as a rule, and I'm gonna read it every single day. Where I never make a mistake again. A gentleman will make a mistake once and never make it again. And I'm that guy where I make the mistake once and never make it again. I may make a couple times, but we're humans, right? But my goal is to make the mistake once and never again. So yeah, I will not make it again. So thank you for watching. Like, comment, subscribe, share. Actually, I see you myself on my Discord. I want to talk to you. I want to chat with you, man. I want to say something to you. I want to say something very to you. Are you unprofitable? Did you waste years of your life trading, gambling? Join our Discord. I want to chat with you real quick. All right, chat. That was fire. That was fire. I got me pumped up. Okay, that's that. Yeah. I'll review this tomorrow again. No. Yeah. Okay. Gonna review this one more time tomorrow. Then we're gonna go on. Then we're gonna move on. Brev. Okay. That's that. We did something really nice here. One more thing we're gonna do, chat, is make more videos. Now let's go to our wrong one. This is my weekly market forecast of Euro USD. My higher time frame analysis prediction has been excellent for the past 3 months that I gave you guys. I think not 3 months, a month or so, month or two. Some of them I don't publish it, but I did give out the higher time frame analysis. If you pay real close attention, this is our next update. This is my weekly market update, weekly market forecast. Of the higher time frame, right? My analysis on a higher time frame. 12-month CRT low got pressed, we go to the CRT high. 3-month time frame, we got to press that CRT low, so we go to the CRT high, which is all over here, right? And what's our key level for this CRT? This, this right over here, this sell-side liquidity in a 3-month time frame for the 3-month CRT. On the monthly, we recently pressed that CRT low on the monthly time frame, right? These two candles. So our drawn liquidity becomes the CRT first. This is our first drawn liquidity. Our second drawn liquidity is all over here. Our third drawn liquidity is all over here, right? That is our high time frame. So we in a monthly time frame, we press our CRT low, we go to CRT high. We press our CRT low, we go to the high. So when the CRT gets met, we go to this CRT. And one thing you guys gotta see here, we have a monthly daily range premium discount on a monthly way from premium ERL to discount IRL. From this IRL, we're going back to premium ERL, which is all over there. So these fair value gaps, so we could definitely avoid easily just through IRL to ERL, because market can't go from a IRL to IRL. It can only go from an IRL to ERL, right? So IRL to ERL. And this IRL is pointing where? Straight to the ERL of the 12-month CRT high. And that's that. So now let's go to the weekly. Weekly, what can we do here? Weekly, you can see we went from a ERL to IRL. All got inversed. Market inversed right back down. People might think, well, we could just go, tap this back and go right back down lower. No. What can we do here is this CRT low, we could get a purge of the CRT low. Or we could potentially go all the way down here, purging out this CRT low and go up higher here, right? And as you guys know, this CRT goes against a higher time frame, so I feel like this CRT should be respected. Well, right? So what am I thinking here is this weekly CRT low getting purged. From this weekly CRT low, we go to the CRT high of the month. CRT high here. First drawn liquidity is going to be first drawn liquidity is going to be the CRT high. Second drawn liquidity is going to be the monthly. Why? Why do I think market should not go down here? Why? Because monthly CRT is pointing over here, and this weekly CRT is going against it. So it may do a 50% drawn liquidity. The 50% of the CRT may get tapped, which already got tapped. Then eventually there's another CRT here. This CRT could push it right back up to over here. So we can have a first week swooping out the low, second week expanding, third week expanding a bit higher, and the fourth week resetting after beating this two type of drawn liquidity. So we can have a monthly open high low close concept where for this week, the first week could manipulate this, this CRT low. The second week could do a little expansion. The third week could do even bigger expansion, meaning this drawn liquidity, and the fourth week could do a after being this monthly CRT low, CRT high, we could do a reset where swooping out the third week CRT high, then eventually just closing down, right? That's what I think could happen. Let's go to the daily time frame. What do I see here? As you can see on the weekly CRT low, we're going from a daily ERL to IRL. So when this IRL gets met, or we're going from this IRL, from this discounted IRL, right? So market swooped at a low, swooped at a high, right? Swoop at a low, swooped at a high, daily range high, daily range low. There's a discounted IRL. So when this discounted IRL gets swooped, we're going to the IRL to all the way ERL. So this is right over here is our ERL, which is pointing to the weekly CRT high. You can see this is very simple, right? It's not complicated at all, right? It's nothing complicated, very simple, right? It's just that practice makes perfect, and just gotta execute now in this case, right? Now I just tell you guys my higher time and bias. All you gotta do is execute, right? And you can see, and on the daily time frame, we do have this. It looks like we have a daily CRT here. CRT looking compared, we go to the CRT high, eventually going from there to the higher time frame, right? So yeah, for the daily CRT, this candle right over here, what could be our key level for this CRT? It could be this weekly daily IRL. Then eventually from the IRL go to ERL, right? And this is my weekly market forecast of EURUSD. I won't be doing GPUSD. I won't be doing DXY because I don't trade these pairs. I only do that. I only use those other pairs for SMT divergence. So now I'll do a top down analysis one more time, and let's get into it. Wait, 12-month CRT low got purged, we're going to the high. The 3-month CRT low got purged, we're going to the CRT high. We have a 3-month key level for the CRT. On the monthly, we have a monthly discounted IRL to ERL. We can see recently moved from a premium ERL to IRL. Right, this is the discount IRL. So now eventually this low, we go from a discounted IRL to ERL, right? Which it could be this high or this high, but it will definitely be all the way here. Why? Market purge out a low, purge out a high, right? Back in the daily range. So once the market taps the discounted, this daily range is pointing to the upside, right? Over there to the upside, so this daily range is pointing to the upside. So once this ERL gets met on the 12-month time frame, our drawn liquidity becomes the daily range high. Why? Because daily range high is a type of a drawn liquidity. So this right over here, once the market taps the discount, market has to go to the equilibrium. Not even the equilibrium. Market has to go to the high. So once it's, everything will point up here, right? You're gonna see, right? And on the weekly, what do we have here? As I said, weekly CRT low get purged. We go to CRT high. What is our weekly key level to the CRT? A weekly key level to the CRT could be this auto block right over here. This right here. This auto block could be a weekly key level. Why not this? Because this right over here it by itself is a CRT as well. And let's go to the daily to give us a more top down. We're going from a daily premium ERL to discounted IRL, right? Because you can see we have a daily range here. From this, we can go from the discounted IRL to all this ERL, right? And to this ERL we have here, it is a discounted, I mean, it's a daily range high. So once that daily range low gets purged, I mean, once that discounted area of the daily range gets tapped, market likes to go to the daily range high or low. It's a form of drawing liquidity. So our IRL to ARL is spawning over here. Our daily range high is spawning all over here, right? After tapping the discounted area, our weekly CRT is spawning down here. So there's a very strong draw on liquidity, right? As well, we could do, create a CRT in the daily time frame, purge out the CRT low, and go higher here. If I do get a daily CRT and get respected, I'm high likely going to not do this as my take profit. My take profit would be the weekly CRT high, right? That's the only take profit I'll have for the take profit. That will be on the only take profit I'll have if I do get in a trade from a lower time frame CRT to the higher time frame CRT. That will be on my take profit. This is my weekly market forecast on ERUSD. Thank you for watching. Like, comment, subscribe, share. I want to see what's on my Discord. I want to chat with you. I want to chat with you. I know you. I've thought about you before. I could visualize you. I want to see you on my Discord, and I want to chat with you. I know you do something wrong right here. I know you're making a mistake. I'm gonna fix you up. Come to the Discord. I'm gonna chat for free. 101. 101. 101. That was a good one too, chat. Can't lie. You can't lie, man. You cannot lie. Yeah. Chat, you guys don't know that this is the most important part of the live streaming. The Saturday and Sunday are the best. Like, there's this. You guys who don't join my stream during the weekends, you're missing on real gems. Because this is where I give out the most, the most knowledge. This is where everything is built up on the weekends, right? I build up my narrative, everything. Watching me. Hey, thank you, man. I've made a couple videos here. Holy crap. Are you struggling? Are you struggling? What are you talking about? You guys, hey chat, I know there's nobody watching right now, but whoever is paying attention to the weekend streams, these are the most viable streams ever. These are more valuable than me actually doing live streams on the weekdays, because this sets the foundation. This is where the most lesson I give you guys. I literally give you guys my whole lesson throughout the whole week on this day. And there's somebody watching here. I can see there's somebody watching. I don't care about that. But this weekend is the most valuable lessons you guys get. Because on the weekends, I talk about the lessons. I talk about the improvements. I give you guys my weekly market forecast. I give the weekly market updates. These are more important than the weekdays. Keep in mind. And there's nobody watching. It's cool. People who come back in life. People are gonna watch the stream. In the future, they're gonna find out, right? I believe. I believe. That's fine, bro. Okay, let me stop, man. But yeah, chat. That is that. Now let's go over our video we're gonna supposed to be making, and this, on today, which is the monthly open high low close concept, right? Are you struggling with your higher time frame analysis, your monthly, your weekly time frame analysis? You wonder, why did this candle close bearish when it's supposed to go from a IRL, IVG to ERL, and you face losses because you don't know the open high low close concept, or the open low high close concept, the most important concept ever. Why is this the most important concept ever? Because this helps you from pattern trading. Market cannot just go from an ERL to IRL, IRL go to ERL, right? Market doesn't go like that. Your MMXM trader, I don't even credit him for this concept. This concept I've been already out. You could go. You could see IC has already talked about this concept a long time ago. Romeo has talked about this concept a long time ago. These concepts are a form, keep in mind, form of a drawn liquidity, but they're not the drawn liquidity. There's like 6 forms of drawn liquidity: the daily range, equilibrium, CRT, range dynamics, high time frame key level, which are, IRL to ERL, ERL to IRL, right? Which is not there, IRL to ERL, IRL to whatever this concept is called, right? The high time frame key level, right? With the high time frame key level, which basically is a IRL to ERL, right? For value gaps and old highs and old lows, right? That's how the high time frame are moved, right? There are forms of it, right? Market order flow. There are forms of drawn liquidity. So don't get this, misunderstand on this, right? On this concepts, right? I just got off topic on that, right? I'm sorry, I just got off topic. Let's get to our topic, which is the open high low cost concept, which is a very important concept to know if you should expect a expansion on this week, or should you expect accumulation? Should you expect a retracement? Should you expect a reset, right? As you guys know, the open high low cost concept goes like this. Let me get a charting here, right? Market opens, right? This is the opening. Market first week, says I'm talking about the monthly time frame. I'm not talking about the weekly. This is strictly monthly, right? Count that accumulation. So the first week of the month is always an accumulation. So now let's get to the protocols of the, let's get to the intricacies, right, of the open high local concept of the higher time frame, which is the monthly, right? The first week of the monthly time frame is a accumulation. The second week is a manipulation of the first week higher or low. The third week is an expansion to the higher or low after sweeping one of the sides. Right? If you sweep out the low, you're gonna go to the high, right? And keep in mind, everything I'm saying here must have a key level, right? Sometimes may not, sometimes do, but most of the time there is always a key level, right? And the fourth week out of the monthly open high low cost concept, or open low high low concept, whatever, right, is a reset. So what is a reset? Reset basically means another word for a retracement. So market, first opens, it generates liquidity, then eventually it manipulates liquidity, eventually it fills liquidity, and eventually it resets, right? I don't think I said it right, but it goes somewhere like that, right? So basically accumulation, manipulation, expansion, retracement, or reset, right? So the first week always accumulates. More high chance of a time where the first week accumulates, right? These are like high probability. Sometimes it may not happen, sometimes it may, right? But first weeks are always accumulation. Second week manipulates the first week higher or low. The third week goes to the higher or low that after you manipulate one of the highs or low, right? So you manipulate the low, you can go to the high. The fourth week resets. So basically a reset, basically a retracement, and to close off the monthly time frame candle to close in a fair price, as you guys know. That's why you guys in Friday, you guys usually talk about a TGIF, where the Friday is usually a retracement / reversals, right? Not a huge reversal, but usually always a retracement. That same thing applies to the monthly, right? And the weekly type of, open high low cost concept, the Friday has to reset. My Friday has to close on a fair price. So that's why it does it. A high chance of it doing that, right? High chance, right? Sometimes if the drawn liquidity is not met, the monthly will open high low cost concept will go up or down, right? Without waiting, because the drawn liquidity has not been met. But this month was a perfect example. So first week accumulates, second week, manipulates the first week's CRT low, right? Eventually, the third week expands, and the fourth week resets. That right there is the open high low cost concept of the monthly. So let me get a drawing here of a brush, right? Week number 1, week number 2, week number this brush candle, week number 3, week number 4, right? 1, 2, 3, 4. The fourth one is just retracement, right? And keep in mind, there's always a key level. Keep in mind, there's a CRT here, CRT high, CRT low of this first week. Then eventually market sweeps at the CRT low of the first week, then taps a hard tapping key level, expands to the first week CRT high, and eventually resets on the fourth week. Right? Now, let's get straight into the charts, right? Into what I mean. First week, right over here. Let me get a drawing here. First week, right over here. Actually, not that drawing. That drawing is too big. First week, accumulation. Right? This week, right over here, accumulates, right? First week accumulates. Second week, manipulates the CRT low. The third week expands. So this, in this case, if soup the CRT low of the first week first, right? So John become the CRT high of the first week. Boom. Once that gets met, the third week. Keep in mind, journal this if you have not, if you did not even journal this point right here. I'm gonna say. After the third week, when he meets a drawn liquidity, the fourth week will soup the third week high and go down to the 50% mark or even the CRT low, right? Or CRT high, vice versa, right? Everything go vice versa here. So make sure you note that down. First week accumulates, second week manipulates the first week low, third week expands to the first week high, the fourth week manipulates the third week high, then it expands to the 50% mark of the third week. Usually that, if your high time frame is bullish to the upside, that's what you're gonna do. It's usually not gonna go to the CRT low because the 50% mark of the CRT is a drawn liquidity, as you guys know. 50% mark, the equilibrium of a CRT of a daily range is usually always a drawn liquidity, right? So market will go to 50%, eventually another CRT response will move right back to the upside. And that is right there. This is how you get a precise higher time frame analysis. This is how you get a precise higher time frame drawn liquidity. This is how you stop gambling and actually start trading. And let's go do a quick recap of what we just said. First week accumulates, second week manipulates the first week low, third week expands, and the fourth week manipulates the third week high or low, and eventually closes inside the range, or usually sometimes you predict the CRT low. Right? It all depends on the higher time frame. The higher time frame is bullish. It's usually not gonna go to CRT low, and eventually the next this retracement will usually sponsor move back to the upside. So yeah, thank you for watching. Like, comment, subscribe, share. Actually, I want to see inside my Discord. I want to chat with you. Are you gambling and you're not trading? Don't tell me you're gambling, man. Chat with me. Come chat with me. Chat with me. Come to my Discord. Link down in the description down below. Chat with me. Alright, that was a good video, chat. Okay, that was a good video. That was a good video. That boy. Many jing. Alright, chat. This is it. Thank you for watching. I see you guys later.